Hello everyone, welcome to the Ichimoku daily analysis for the S&P 500 for Tuesday, March the 29th, 2011. Well, a change of trend today, and yesterday we highlighted the fact that we had a potential Japanese candlestick bearish engulfing pattern and a potential tweezers top pattern. And we actually have had that change of trend to the downside. Today's candle has made a lower high and a lower low. Unfortunately for the bears, though, there is no bearishness in the short-term dynamics in this market. We can see that we have a very large green body candle, and the size of that body is quite large compared to the previous two candles. The large green body means that the buyers have made some decent net bullish progress on the day between the open and the close. And by closing at the high, they've actually closed this market with very strong control, and they're showing strong commitment to taking this market higher. The only limiting factor in that is the fact that they failed to take out the previous high. So that could be important, but the market closed just below that previous high. So that's a very important area of resistance for trading tomorrow. Probably around 1320 is the area that we should be looking at. So the market tested that area on 3 occasions, and even today failed to close up above there. But the market is set up with a very bullish bar to test above there tomorrow. Now we have had the breakout up above the cloud, so that's quite important too. That is a bullish signal in Ichimoku charts terms, and it's occurred on a bullish bar. There's a good likelihood that the market will change trend, so we should be watching that area for a potential higher high and higher low. Now if the market does trade to the upside, certainly above this area, then we have potential resistance at 1324, and then up to 1332 and a large range of resistance, and then certainly up to the swing high in the symmetrical triangle that we had previously at 1344. To the downside, we have strong support all the way through the cloud down to roughly 1280, and then support at the Tenkan-sen and Kijun-sen, which are at 1290 and 1293. Below that, if we do have a bearish breakout to the downside, support down to 1265, but that won't be happening soon. Certainly solid support at the round number 1300 to the downside as well, if the trend does continue down. Now, in Ichimoku charts terms, we do have an overall positive bias now again. If we look at all of this trading, very bullish when we were trading up above the cloud previously. The market tested within the cloud, so a neutral market. And the market actually failed to close down below the clouds during all of that time. So that could be significant for this market, for a continued appreciation of this market. We do have the market trading up above the Kijun-sen and Tenkan-sen, which means the market's bullish in the medium-term and fast-term timeframes. And we haven't had a crossover of the Tenkan-sen above the Kijun-sen yet, so we haven't had a bullish signal in that regard. Now, that may happen fairly soon, because both of those indicators look like they're converging, and there could be a crossover soon. So basically, we should be watching the highs of the previous 3 candles and look for that 1320 resistance to be taken out. But then also watch for the market for any potential continuation of the trend to the downside to test around 1300.